So, I know, John, you want to add something?
I just want to add one more point on this. Since Sandeep has already said that we don't have any bank assurance partner, we have two large non-banking finance companies. From some 5 years back, we have launched a very simple product for all our truck customers. We are the largest lender of truck financing. We lend roughly around 50,000 trucks is what we fund every month. And that is one segment which no industry, no insurance company want to touch because of the risk inherited, because the profile of the truck driver and the customer is slightly substandard in terms of their health and hygiene and all those factors. So we have designed a very simple product, and we have made it compulsory for everybody to buy. When they are taking a loan, it's a bundled product, and the distribution cost is zero, because the lending company has said that, look, we really don't want to make money out of this product, although it's our in-house company, so that's much more easy for us to convince them. And the entire benefit we have passed on to the customer. In last 5 years, we have covered close to around 26 lakhs customers. We have settled a claim of roughly around 8,000 claims is what we have settled. And now the customers are coming and saying that we need a particular product. And now what we have done in the second stage is all those 600 branches of that non-banking finance company, we have simplified another very simple product with across the counter, customer is coming and buying the product. So what I'm saying, it's a little niche market, and these are the ways and means that there's a great potential is available in a lot of non-banking finance company. One more thing which I can just say, selling to the existing customer where the relationship is there is much more easy than going in the new market. So with this approach, I think this another, and lot of companies has tried bundling the product with the loans or other things, and the distribution cost is hardly any. So the major benefit goes to the customer. So that's one more point. And
Fair
that
enough.
can also help us in increasing the sector.
I think at India First also you've done some wrap products with gold loans and some of those kinds of bundle products that Manoj is talking about, right?
Yeah, I agree with the views of Sandeep also. One of the things is that, you have opportunities to really distribute the product through the available means, while you also have an opportunity to influence the regulator to change the distribution model so that it will become open. That's a different thing. And we need to really focus on the things which are really available right now. So one of the opportunities is to go through the group route where, it can actually wrap around and then it can bundle the products. Over a period of time, the life insurance statistics clearly suggest that, the business is slowly moving from the individual business to the group business. And that's the kind of a trend which is happening, maybe because of the restrictive problems we are facing in developing the individual business through the individual agents and all that, but more because also that the customers are seeing a very clear value proposition in bargaining in bulk and then getting perhaps a price discount in the premiums. And you also see that, if you look at the claim settlement of the group claims versus individual claims, the group claim settlement ratio is much higher than the individual. So I think there is a case for looking at, why we need not, think that, individually is one silo and group is another silo. You can open it up completely, and then, for example, this could be a closed group. The people who are here, the moment, they actually bargain as a group, we can actually sell them insurance and we can wrap it around with whatever product they want to do. One is the financial products, like we are talking about gold loans and then credit cards, whatever it is. You can do it, over a period of time with non-financial products also. So once you start wrapping around, 2 or 3 requirements for that is like what Sandeep has said, is simplicity. It has to be very simple, transparent. People should be able to understand the bundled benefit with unbundled product also. Then the second important thing is it must give a value proposition to the person to buy it as a bundle as compared to in a standalone product. The moment you establish these two, then I think that's the way to go about it.
I do want to, Manoj talked about like bringing down charges, and I think John, at your firm also you've been able to cut back on charges for clients, you've been able to give them better surrender values, etc. Partly because you don't rely on any agents actually, you have your own model. Could you talk a little bit about that, and are you solely relying on the banks to distribute, or are there some new steps that you are taking as well to keep building on that?
Okay, so to answer your second question first, if that was only 2 questions, yes, we are solely reliant on our banks because our banks have only got 5 crore customers. And let's just discount that to say 2.5 crores. So we don't need to go anywhere else. I was interested to Manoj. Manoj, you're a bank assurer. Okay. You may be a brackets N hyphen bank assurer.
Yeah, exactly.
But,
and then tied to one.
but you know, bless you, 50,000 trucks a month isn't a niche. So there is a theme that's emerged in the conversation today is in looking at distribution. We've all, if I had 10 rupees for every distribution word that had been said today, I could probably afford to buy everybody lunch. It's a big challenge for us, and you're looking for people who already have big customer bases, whether it's trucks, whether it's banks, whether it's ATM. Could it be airlines with the loyalty cards? In other countries, it's supermarkets. Could it be a telecoms provider? And we've got Bharti AXA. How does that work? So there is, how can you align with and connect to existing customer pools and existing affinity groups with brands that are credible? Because if you're, and I think I heard Flipkart, so my brain's sort of going about sort of 100 miles an hour thinking, okay, so is this brand credible? What does this brand stand for? Does the brand stand for value and integrity? And if it stands for value and integrity, then would you buy your insurance through this brand? Interesting. Okay. So that is a very interesting dialogue. In terms of where we operate as a company, we are the only company that has 0 agents. I say I can fit all of my agents in the pocket, and they're there today. 0. And therefore we don't have the cost of an agency. And so what we do is we take that value and we give it back to the customer in terms of lower charges, improved early surrender terms, and because we take lower charges, more of the customer's money goes into the investment side of the product if it's a savings-linked product. And that's a unique proposition. We're very proud because now that everybody has launched their products, we feel pretty damn competitive. And the conversation with the bank and with the customer is, why should you buy your insurance from the bank? Answer, because you get more bang for your buck. Because the bank's distributing it at marginal cost, and so the value can be passed back to the customer. That's an efficient system. And I think that my observation in Asia over the last 20 years or so has been that I would suggest that banks have taken agency-type commissions for doing not agency-type work. And as from a distribution model, it's been very profitable, but question mark, where does profit end and profiteering start? That's a conversation for another time. But if we look at where regulation is moving, look at where companies are moving, look at where competition is moving, it's moving towards, quite frankly, less money for the distributor. The days of 40% commission have gone and they're not coming back. So we all have to learn to operate on different margins. We need to be able to distribute more efficiently for less cost. And I'm interested in the conversation about digital. And again, my analogy is the travel agent. 20 years ago, we all bought our travel from a travel agent. How many of us now go to makemytrip.com? And I think there's one piece which is, maybe in 20 years ago in time, the insurance agent will have gone the same way as the travel agent. Mostly extinct, apart from in the higher layers where the bespoke service actually provides value that people are willing to pay for. And for the mass market, for standard people who want standard solutions, the online world serves perfectly. I think that there's another, just from my notes, another piece that feeds into that, because it comes from digital, and it's a fascinating conversation, and it's social media. And it's our digital reputation. And I think all financial companies, historically financial companies have been very big, they've controlled a lot of capital, they've been very centralized. There aren't many small finance companies, they're all big. But in this digital world now, we talked about TripAdvisor or Facebook, or your digital reputation. If you upset somebody, they can tell thousands of people this afternoon. Now, I get customer complaints addressed to me through LinkedIn. I can't stop that. That is the new world we live in. So a lot of companies are shy about it. I see ICICI Prudential on Facebook, which I think is very brave and very leading, and I see them getting a lot of flack for it. And they handle it very professionally, saying, that's very interesting, thanks for that, please call us, we'll discuss it one-to-one. I mean, we're not going to discuss your complaint on Facebook. But our digital reputation and our reputation in the marketplace expressed through social media, I think is going to be a challenge for us in the next cycle. Whatever happened over the last cycle, and Girish suggested that maybe some things had gone wrong, I think those are going to be much more difficult to sidestep. And we're living our lives now in this spotlight where everybody can see, everybody can connect, everybody can form an opinion, my opinion counts. So I think living a good life is going to be much more important. And as Sandeep said, we've got to put the customer at the front of what we do. And really, if we fail to do that, if we start designing a product with the question, what's the commission rate, then we're going to get found out, exposed, and whether it's on social media or through the Dear Wall Street Journal, it's going to be exposed. And so, as you know now, everybody can be a journalist. Yeah, with a mobile phone and a connection to whatever social media, Twitter or whatever, everybody's a journalist. So everybody is now critiquing and assessing without any filtering and any editing and any responsibility. Everybody's critiquing everybody else. So I think this leads to some very interesting there are going to have to be some new models and some new market conduct that will describe how we conduct ourselves and how we go about growing our business in the next cycle. I don't know what to call it. Is it the next 10 years? I think it's going to start. It started before because people like iPro were already there. So how do we adapt to that? So then we have to perhaps, heresy, let go of agents. No, everybody knows that insurance gets sold through agents. That's conventional wisdom. Everybody knows it. And it's been true forever. But is it a case of what got you here won't get you there? And so for those companies and for the regulators and everybody has to almost let go of the idea that it can only be done through agency. I think for the next 5 years, agency will continue to be the major distribution channel. But I think in 15 years, it won't. And so I think it's almost like being asked to eat your own baby. People have got to get used to the idea that there's a new way coming forward, whether it's banks, whether it's digital, whether it's something else. It's going to be different.
Right, and I think this idea of how do you use social media, how do you use that to interact with customers, it's a challenge not just for insurance but across financial services. I don't think people have a handle on how to do it right because it has become a forum for complaints actually, and how do you deal with hundreds of them? So it's probably the next several years this will be a separate panel in itself. And let me clarify, everybody can be a journalist but not responsible journalists, which you can get from the Wall Street Journal. I do want to switch a little bit to, we talked a little bit about reaching new customers, but one of the challenges has been retaining customers and renewals of insurance. And I know Vilas has some ideas about how, how technology can help in that. Could you talk a little bit about that?
Sure. So I think persistency is a big issue for the life insurance industry in India. I think many of our panelists would be spending sleepless nights on persistency management. Okay, so I think technology can be an enabler, and when I say technology can be an enabler, technology enables business. Okay, I think so. Again, figures. If I have to quote figures for the industry, for policies which are bought online, okay, the persistency is about 15 to 20% higher, and you can look at 13th month, 25th month, 37th month, 49th month persistency is about 15 to 20% higher. So I think I go back to my argument of, if you are able to engage with the customers more through online and through the life cycle, I think your customers will be with you for longer. It's not that they will be for you forever, but the probability of being longer is very high. The second point is that I think one of the panelists mentioned is that unlike a banking transaction where you have touch points with your customers on a regular basis, it means I will check my balance every month, or I'll do a online transaction. There are very few instances of touching your customers throughout the life cycle. So you have to find opportunities, and it can be a combination of technology and some other channels. It can be your contact center channel, it can be your ATM channel, like Dr. Nandagopal mentioned, various channels where you are able to look at that. And we work with many of our customers of having persistency management solutions, okay? Especially when we talked about having a banca channel. I think a classic example I can cite without naming a client is that a bank changed its life insurance partners, and all of a sudden the insurer realized that they don't have a relationship with the customer. So what happens in that case? So you have what is known as orphan customers, and there will be a whole lot of customers which are orphan. So the more reason to have a very strong connect with your partners directly for insurance and not have it through any of your direct channels, okay? And there are many cases where the agent is the only channel, only connect with the customer, and there is no relationship. So technology helps you to create a solution or a framework where you are able to reach the customer. Is to have an analytics engine around it, and I'm using technology terms, but what I'm actually alluding to is there a way where I know from a segment of customers which is the customer who is prone not to pay, okay? When do I connect him, okay? Do I need to really connect him at all, or do I need to only wish him on his birthday or his anniversary, okay? So you need to segment your customers based on his paying pattern, based on his demographics, okay, based on his future potential, okay. How many of us have a common view of a customer through multiple channels, okay, and utilize that channel, okay, to cross-sell and upsell as we go along. So I think the point I'm making is that retaining customers is as important as getting in new customers, because I think that's an issue which the industry is facing. So have a strategy, digital or direct, to really connect with your customers as often as you can, and do it in a very scientific way. And there is a scientific way of doing it, where big data analytics actually help us doing that. So that's my submission to the panel.
If I could just make a quick point out there, I fully agree with whatever Vilas just said. The only thing is that 90% of customer attrition happens because of the product never got sold properly. So you got to first use technology to make sure that, and whether that's again contact centers, whether it's direct communication, verification calls, whatever you do, you got to make sure that the product got sold right, the customer understood why he or she bought that product, that they have to pay premiums over time. If you do that, 90% of the persistency problem. And so a lot of companies, started putting a lot more emphasis on CRM tools, analytics, propensity modeling, retention calling, but the issue really started with the sales process. And it's not to say that people don't now focus on the mis-selling aspect as well, but initially a lot of the investment happened at in the reactive stage, whereas maximum investment needs to happen in the proactive stage, and some of the investment at the back end to make sure that customers have multiple premium payment options, you make it easier for them to stay connected, and you own the orphans because agents have attrited or whatever else. But the real issue is at the point of sale.
Fair enough. I want to also switch gears to new products, right? I mean, we've seen a whole rationalization of products, but are we, is the industry working on coming up with new products for investors? Girish, do you want to talk a little bit about this? And I know you guys have launched this reverse mortgage, which is kind of interesting. It's in the US, it's a big deal. If you could just talk about about your firm, but also what we see in the industry.
Yeah, actually, I'm a firm believer that product innovation in life insurance has very limited meaning. Because with my limited understanding of insurance technicalities, there are only 2 points where you can play with the product. One is the payment that you take in. How can you variabilize that pattern, and also the payment that is made out to the customer after the tenure. In between, I don't think there is any innovation possible. So we are talking of a very little possibility there. What actually we should be looking at is what is my big opportunity at this point in a country where insurance is very poorly understood. And just to throw some statistics to impress the audience, we have what, 35 crores of bank population, people having bank accounts. We have around 42 crores of policies distributed in India. According to me, all these people stay in 30% of India, not in the 70% India which lives in villages. Now the challenge is about covering that 70%. How do I do that? There my technology, I have done some pilots, has not helped. How do I get my sales process right there? How do I get their product requirement right? Now even there, what is my big opportunity? When I look at India as a country, our social system where there is no social security system available, I think health and pension are 2 big opportunities that we have in terms of products. What do I do? Can I make it work on my own? The answer unfortunately is no, because I tell you, when I started selling insurance 12 years back, my ultimate dream was to make insurance available at the grocery shop. With the hope that the hospital that I am looking for in XYZ village or small town will be available by then. But after 13 years and after me heading the insurance company, I still don't have that hospital there. My aspiration still remains there, that I want to sell insurance through grocery shops. So I have dependencies as an insurance company. My policy is just one thing. When I go to you and sell the proposition in some village saying that, oh, this will take care of your health problems, he will say, where is the doctor? Where is the facility? Where is medical care? Only this, I will have to travel to Mumbai or nearby big town. So how do I get this entire puzzle solved? Product can come and product can be copied from other countries, from John's book, that's possible. But this is something, and this is the point I was trying to make in my initial comment, that we need to get the basic modalities right, the functioning model right. That's why sales behavior that Sandeep was talking about. I think we focus too much on acquisition. We don't focus on post-sales. Insurance, and I'm sorry guys, you are all from the family, from the industry, this you may not like, but probably we are the only industry wherein our salesman doesn't want to go back to the customer to give the finished product, which is a policy. You talk to anybody, they say my 30% policies come back, don't get delivered. Then the similar story which I have been hearing for last 10 years, that we have tried MNC courier companies, we have tried speed post, etc., etc. My point is, why can't my salesman go and give that policy to the customer? We are talking about developing touch points, but we don't develop them in the beginning itself. And that's where the problem is. We need to get this model right. We should not get, Hindustan Lever has found its calling in rural India because 70% of their noodle growth has come from rural India. But it will be too naive for me to hope that I can also look for that kind of success in rural India. No, I have dependencies. First, I need to clear those dependencies to be successful. So then product will come, then I can develop my distribution capacity around that, etc., etc. So I think I have given a long answer to your short question, but that is something which I firmly believe in.
So So stick with few products, but really make them effective and make them reach a wider
Correct.
audience.
Correct. Also, one small point, like these opportunity areas, particularly in a country like India where there is no social security system, industry should also be helped by government in creating medical care infrastructure so that we create right products around them. Like in small countries like UAE or Kuwait and all, your medical insurance is such an effective tool to sell, and it has high acceptability. In our case, it is not gaining acceptability because they don't find it worthwhile. And that's where I think government and other agencies, whoever, same as pension, I think anybody who, particularly the young generation, will find anything which is about retirement solution attractive if we create right avenues for that. Right. We are manufacturers, but there are other dependencies also on these lines. Other product lines, like whether it is savings oriented or protection oriented, have been in the market being sold in one or the other form. So I won't talk about that.
Fair enough. On this point, you mentioned about reaching the remaining 70%. Now, at Shriram, you talked about how you reached truck drivers, for example, but could you talk about other initiatives on, pushing for micro insurance? Yeah. I think everybody is looking at ways to build that business. And if you could share some examples of what has worked and what hasn't.
See, in the whole discussion, when we say that digital and all that is important, we must not forget that currently the large number of large business is coming from an individual agent. LIC, which is a flagship company, as high as 98% of their sale is happening through individual agent. There, we as a company have always spoke to the regulator and at the industry forum as well. Unless we will not simplify the agent recruitment process, large number of agents will not come. And as Greet rightly said that 70% of the rural population is still not getting insurance product. There, I don't think any digital strategy will work at this stage. You can use maybe mobile platform at the once you sell for collecting the renewal premium, but for selling, I don't think that you can use any platform. There, you have to have a physical presence, and there, I don't think you will get agents who will attend 25 hours of training and 50 hours of training and then pass the examination and all that. There, we as a company, what we have done is that we have started in a smaller way again, appointing directly sales officers on the company role. But it's a very, very tedious process. We have identified some initiative called Bima Gram. I can just explain the concept. We have identified village with a population of say 5,000. So far, we have only identified 50 villages, and we are working on those villages from last almost a year. The entire process, from identification to selling insurance policy and to teaching, it takes almost close to 1.5 years. We have to first go and meet the people, the decision makers in the city, explain them the concept and all that, then take their buy-in, then explain the people on insurance. Then we have to do some social work in that village, like repairing of the school wall or painting of all that. It requires a lot of money, and the results are very, very less. Like this 50 villages which we have taken it, now so the new CSR guideline, since we have to spend some money on this initiative, we are just thinking that if some money we can put it up of our CSR in those villages, but these are all very long drawn process. In this, we cannot get a very quick result. And the other handicap which we face is that we get a lot of people there who want to join us, but then they are not 10th pass. And we cannot sell them this micro insurance product also, because the premium cycle is they cannot pay every day, they can only pay at the time of the crop. So maybe 2 premium they may not pay, and at the time of the 3rd year the crop is very good, or at some season the crop is very good, they don't mind paying full. So all these are the challenges. Immediately we don't have an answer. The only thing which we have worked out as a company, that our focus, if you see we have roughly 300 branches, our 80% of branches are in tier 3 towns. Every second policy which we are selling is a rural policy as per the IRDA definition. And that's maybe our business model. We don't take that as a a percentage of your business you have to do as a rural or a social business. For Sriram, this is a business model, and we are working in that segment. It doesn't reflect much in our premium, but it definitely gets reflected in the number of lives. But it is a hard way. There is no easy answer. These initiatives cannot give a very high premium in a very short term.